Hey everyone, welcome back to the channel. If you've been keeping an eye on the crypto market lately, you've probably noticed the roller coaster ride it's been on. Prices are swinging, emotions are high, and it's easy to feel overwhelmed. But here's the thing, market volatility isn't necessarily a bad thing. In fact, it can be an opportunity if you know how to navigate it. So today, I'm breaking down my strategy for investing during a crypto crash. Whether you're a seasoned investor or just getting started, this video will give you actionable tips to stay calm and make smart moves. Let's dive in. Understanding market volatility. Why crypto crashes happen. First things first, why do crypto markets crash? Unlike traditional markets, cryptocurrencies are highly speculative and influenced by factors like regulatory news, macroeconomic trends, and even social media hype. This makes them more prone to sharp price swings. But here's the key. Volatility is part of the game. It's not about avoiding crashes. It's about being prepared for them. My mindset during a crash. Staying calm and focused. When the market dips, it's easy to panic. Trust me, I've been there. But over time, I've learned that emotional decisions rarely lead to good outcomes. Instead, I focus on the long-term vision. I ask myself, has the fundamental value of the projects I believe in changed? If the answer is no, then a price drop might just be a buying opportunity. Remember, the goal isn't to time the market perfectly. It's to make informed decisions that align with your goals. My 3-step strategy for investing during a crash. Now, let's talk about my strategy. Here's how I approach investing during market volatility. Step 1. Reassess your portfolio. Take a close look at your current holdings. Are you overexposed to high-risk assets? If so, consider rebalancing to reduce risk. I like to maintain a mix of established coins like Bitcoin and Ethereum, along with a few promising altcoins. Diversification is your friend here. Step 2. Dollar cost averaging, DCA. Instead of trying to predict the bottom, I use dollar cost averaging. This means investing a fixed amount at regular intervals, regardless of the price. It takes the emotion out of the equation and helps you accumulate assets at an average cost over time. Step 3. Focus on fundamentals. During a crash, weak projects often get weeded out. This is the perfect time to double down on projects with strong fundamentals, solid teams, real-world use cases, and active communities. Do your research and invest in what you truly believe in. Common mistakes to avoid. Before we wrap up, let's talk about what not to do during a crypto crash. First, avoid panic selling. Selling at a loss locks in those losses and takes you out of the game. Second, don't over-leverage. Trading on margin might seem tempting, but it can amplify your losses. And finally, don't chase hype. Stick to your strategy and avoid FOMO-driven decisions. The bigger picture, why volatility can be your ally. Here's the bottom line. Volatility is a double-edged sword. Yes, it can be nerve-wracking, but it also creates opportunities. Historically, every major crypto crash has been followed by a recovery and new all-time highs. If you stay disciplined and keep a long-term perspective, you can turn market turbulence into a stepping stone for growth. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. And let me know in the comments, how are you navigating this crypto crash? Are you buying the dip, holding steady, or taking a break? I'd love to hear your thoughts. Until next time, stay smart, stay patient, and happy investing.